Good afternoon, everybody. This is Dennis Woe with the Active Trend Traders for the How to Make Money Trading Stocks webinar we do every Friday, almost every Friday at 11 o'clock, just to check up and see what's been happening in the market since we do our the sister program to this one, which is Aftermarket Mondays. And if you like this program, you want to be able to tie into the other one or watch the recording. It is up on the YouTube channel, which is Market Tech Talk. I want to remind everybody that all the materials we have to present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about me. What we're trying to do in with the both the Aftermarket Monday and also this How to Make Money Trading Stocks webinar is to basically provide a very short, concise, 10 to 15 minutes of market update, what looks good, what potentially looks good for setting up trades, or a review of trades what we did do. And we just keep it short, sweet, to the point, and then because I recognize your time is valuable. Most people are still working for a living, and so therefore if I can keep it at 10 to 15 minutes but you get some actionable information, that is absolutely awesome. That is what I'm after. And if you want more in-depth information, you become a premium member of Active Trend Trading, and then you get the actual triggers to the trades, and we track together. I answer email questions from the premium members about individual stocks, what I think about them, and that type of thing, and or just about any other kind of question you might want to think of. Now, some I do draw lines. I don't give individual marital counseling or anything like that. But anyway, hey, so real quick, market review, stocks, ETFs, setting up and outcomes from the ones that we're setting up from last week. And remember, you have been given the keys. Now learn how to open the door to trading opportunity. Got a really nice bounce. All the indexes are up for the week. Active Trend Trading, we got a couple of really nice moves, both in Netflix and we did great with our Tesla trades for the Strategy 3 this week. Got hit on the Spider trade a little bit on Strategy 3, and then Strategy 2, like I said, Netflix, and then we're showing ourselves up nicely on the LABU trade that we initiated yesterday. After a little bit of confusion, we got it out there. Hopefully you have been able to jump into that if you are parallel trading. Let's take a look at the S&P. S&P, guys, has basically broken through to the upside. Again, another one of those short, shallow pullbacks. It is now over 250 days since the S&P or since any of the indexes has had a 5% pullback or more. And so this particular pullback, we're getting these really short. I mean, it's fine. I mean, it's pulled back right to the moving average. Okay, right there, you're talking about 2%. This last one, about 2%, and then rebound, away she goes, back in action. We have to elevate our area of support now up to 2453. As with any type of breakout, an area of resistance has a reverse polarity now, and it becomes a area of support. And so we'll watch and see if this breakout holds. So far, it's looking good. Again, those who've been premium members who follow the Active Trend Trading System, look how well the True Strength Index basically reflected this preparation for this move, and then bam, away it goes. On a weekly chart, what are we looking at? Yes, we were showing some negative divergence, but it is clicked up now and it's starting to move up. Market forecast is starting to move up. Also on a weekly chart, the momentum never got back down to the lower level, and we'll be taking a look very quickly at the I think you'll find it interesting. We'll take a real quick look at the seasonality on the S&P to say, okay, hey, what could we be expecting? This market just continues to push and push and push and push and push, and you know, short pullback, and bam, it moves higher. So S&P, NASDAQ. NASDAQ is one of those, you know, I'll just tell you, be straight up with you. I kicked myself in the rear end on this one because we got a solid signal up here about a week ago, which would have provided a really nice entry into either the Qs or TQQ. We had a Morningstar type of entry here where could have jumped in here or just breaking back up through the 8-day moving average, and it's gone up to also break out, and so and right now pushing into resistance from this past high over here. Hasn't made it through that, but this was one heck of a little run. One out on the TQQ. What's that equate to? Again, if one, okay, just bought on the close of the TSI tick up. Just watch this area over here. Where are you? Watch right here, and I'll show you where the TSI tick up is. So we're coming down, minus 24, minus 26, minus 21. There is the TSI tick up. Right there. If you're watching intraday, that would have been a buy at the end of the day, or a, you know, any type of pullback down into the body, or a break above the 8-day would have been on the following day, would have been a buy on this. And so let's say 50, 98, 50, 50-ish, and it's from about 10% to where it is right now. So that's a nice little rally. But again and again and again, guys, you know, premium members, you know, you're seeing it, I know, time and time again with your watch list, that TSI tick up is really been a really very powerful entry rule. RUT. And so RUT, again, pushing back up to the top side of its upward trending channel. Now, normally on a upward trending channel at the end of a, you know, at the end of an uptrend, can be deemed or thought of as a bearish kind of move. But Russell, hey, you know, it's also locked into just this little, you know, slowly grinding higher. We haven't hit the sweet spot for Russell going into the end of the year yet, but as you can see, bounce off support, TSI tick up off of support here at 1402, and now it's back up at a resistance level. Resistance is basically right now between 1430, 1440, and if prices get up in, you know, towards that high area, or it gives us a reversal candle in or anywhere in this resistance zone, that might tell us that, hey, we're going to pull back and pull back into a new, you know, support level. Not a lot to do with Russell at this particular point in time. So that's what the indexes are showing us. Okay, as far as stocks that I'm watching, okay, Nugget is messing around trying to go into its seasonal run to match that of gold. LABU, we did jump into this is the biotech 3-time leveraged index, 3 times leveraged ETF. We jumped into that yesterday. Average cost of getting in was $64.98. That is currently, this particular one is currently up to about $68. If you did get into this trade, okay, 69.47 will equate to about a 7% gain. That's where I'm placing my initial T1 target 1 profit taking level. And again, I put that as a conditional order where if prices go up through that, it will sell half of my position at the market. I am not flashing where my actual, you know, limit is to any market makers that are out there. I want it to be basically taken out on strength, and we'll see if we get up there. If we get a nice little surge into the end of the day, it may take that out today. So again, LABU, my T1 target, 7%, around 7%, is up at 69.47. So if you're in this trade, that's the way I'm looking at trading this. And on the alert, the email alert that went out, it did say, T1 would be somewhere between 7 and 10%. All right, Mark, that's all. Yeah, it was kind of a crazy entry yesterday, but it definitely, hey, it worked great as a conditional order. Okay, Netflix pre-earning runs, bought last Friday, in fact. We bought the 21 July 155 calls. We bought it at 505. We sold it on earlier this week at $9 with the anticipation. What we were anticipating is that two things were going to happen. One, that Netflix was going to have a run into earnings, and two, the implied volatility on the option was going to increase. And both things happen, and happen very nicely. And so as soon as, I was expecting it to run somewhere between 8, the value to get up to $8 to $10. So when it hit 9, I split the difference, and bam, I'll take that, all day. And that was a strategy 2. And I'm still looking at how to play the dynamic duo of Tesla and NVDA. Both of those are really, NVDA is a stronger fundamental stock, but Tesla is a really awesome, technical stock. And so both provide very liquid options, but also opportunities for strategy 1, which is to own the shares, and strategy 2, to basically do an option thing. And both of them were holding leaps in our strategy 3 position. So the reality about trend trading, everybody needs to know, is 1, you need to know the trend, and that's what we try to identify with the active trend trading system. Define the areas of interest. That's, in other words, those are areas where I want to take action. And secondly, define the trigger, strategy and targets of when I'm going to get in, what strategy I'm going to use, when I'm going to get out, and basically manage the trade that we're looking at. Here's where we're sitting as of, again, based on from where we were last week to where we are this week, a little bit over $2,000 for the week, and I'm very pleased. I'm still hitting over 60% on the win-loss ratio for this year. And for those of you who remember, my target return for the year with the active trend trading is basically I keep it standard at 40%. We hit 20% at the end of June, or about 19% and some change. I basically at that point put it on the line and said, I believe that the active trend trading system can do 20% for the second half of 2017 by itself. So if that in fact happens, that would give us a return for the year a little bit over 60%. So that's my new target return. It's not a promise, it's not a guarantee, but that's my goal for the system going through the end of 2017. So yeah, David, I was noticing that that we got really darn close on the LABU trade to be able to get out of that, and hopefully we'll pop up there a little bit later in the day to actually take out that. You say you got within 2 cents. I think I was within like 15 cents, and and the thing about it is, if you're sitting there watching that. Well, now I'm going to take that back. I was going to say, if you're sitting there watching and you see it get so close to your target, you can go ahead and just take your profit. But at the same time, at some point, if you do that, as soon as you take your profit, it's going to take off and run from there, and then you'll kick yourself in the rear for jumping out too early. So let's see. Okay, I want to talk to you really quick about the. I was supposed to have. Oh, darn it. Okay, seasonality, gold. Basically, I'm looking at gold, guys, for July is kind of a bottoming period, and then it takes off from there. And so we're, just patiently waiting on Nugget, which is the gold miners, to basically, get into this August, September, into early part of October run. How far is it going to run? Is it going to be muted this year because the interest rates are continuing to climb, therefore taking some of the luster off the gold? We'll see. We are expecting some kind of a run in there, 25, 30, 40% on Nugget. And then last but not least, hey, that brings us to the end of it. I want to take a real quick look at a couple of stocks, the entities, and I want to show you. One is the LADBU trade. There we go. Basically, we got into that on the 13th, and you really need to see this on, and it was based on a DSI tick up above the 8-day. It washed out yesterday and sold off to the 20-day, but then did a really nice rebound into the end of the day. This big range candle, really tested your pucker point on getting into the stock, because we bought a little bit at 64.50-ish, and we bought, our initial trigger got us in like it's 65.30. And so again, tested the pucker point, but we had put our stop down a little bit below the at 61.75. And so what I'll be doing, if you're following this trade, is I will be adjusting my stop loss now, probably just a little bit above the 8-day moving average, or below the 8-day moving average, because I want to, I don't want to give away totally all my profit. I'm not going to let this fall all the way to 61.75. Just don't want to do that. Netflix was a really nice setup last week. We were coming up of, again, TSI tick up. This is an option, was an option strategy. Here is the 7th, and what we basically looked at this and, okay, this has a potential of running. So we went ahead and at the close, like a few minutes before the close, I went out to the 21 July, which is the options that expire next week, bought a 155, which was out of the money, one strike price out of the money, 155 call at $5, and sure enough, then it took off on Monday, Tuesday, Wednesday. I think we closed out the majority or all this position either on Wednesday or Thursday when it hit $9, and so I was perfectly good with a 78% profit. And again, if you are long in Netflix or you haven't gotten out of that particular, if you did that trade and haven't gotten out of it, remember Netflix has earnings Monday, and they report after hours, and so I'm not going to do anything on Netflix right now, and I will just lay up GDX, which is the gold miner. And, it appears as if it is trying to make a stand here. It's got a good, level of support down here about the 2082 level. And watch gold. Right now we're looking at a bullish engulfing for the week. A little bit of a, let's see, do we have a, yeah, a little bit of a TSI tick up for the week. So that may be excellent going into next week and be the indication that, hey, gold is going to flip back around. I also like to take a look at GLD, which is actual gold, and you're getting a similar type of thing here. Nice bullish engulfing on a weekly chart. Hasn't totally, no TSI tick up on that yet. And let's see. NVDA is, we don't need to go over NVDA because it has been going nuts. Tesla, no. I think that should do it. It gives you a couple of things to look at for going into next week, guys. And again, be on the lookout for your invitation to Aftermarket Monday webinar. If there's any quick questions I can answer, I'll be glad to answer it. Okay, well, here's what I'm going to be doing through the end of this week. This is one thing that's nice about trading, trading for a living, is that it does provide some flexibility. So I get up every morning about 3 o'clock, 4 o'clock in the morning, get out to the market, jump on this computer, see how the market's doing, see how the plan that we put together the night before is working out. It's working out. We'll watch the market through the end of the day a little bit, but then it leaves me time, especially living here in Hawaii. The market closes at 10 o'clock my time. I jump in and start working and get a good 2, 3, 4 hours worth of demo on our house here in Hawaii. You can see this. There was a wall behind me that made up part of the kitchen. It is no longer there. It has been blown away. Military man is always so yeah, David, I think there's some truth to that. Military man is always a morning person. And so anyway, hey, thanks for joining us today. Remember, if you are a premium member, join us at 12 noon Pacific time, straight up, and we'll be doing the final hour. We'll get that started again at 12 noon. So until Monday, aloha. Trade wisely, trade profitably. God bless everybody. Have a great weekend.